Hey everybody, welcome to Mortgage Today for Friday, August 25th, 2023, and oh, what a day it was. MBS started out pretty much flat, up 4 basis points on the open. Stocks were about the same. Federal Reserve Chair Jerome Powell said that the U.S. Central Bank is prepared to raise interest rates further if needed and intends to keep borrowing costs high until inflation is on a convincing path towards the Fed's 2% target, not 2.9, not 2.7, not 2.5, 2% target. The Fed chief welcomed the slower price gains the U.S. economy has achieved thanks to tighter monetary policy and further loosening of supply constraints from the pandemic. However, he cautioned that the process is still a long way to go, even with the more favorable recent readings. At the same time, Powell suggested the Fed could hold rates steady in the next meeting in September, as investors expect. The Boston Fed President Susan Collins said, "We may need additional increments, and we may be very near a place where we can hold a substantial period of time." Former Treasury Secretary Larry Summers urged to continue hawkishness in an editorial for the Washington Post. We got a new Atlanta Fed GDP now estimate yesterday, with the model saying a 5.9% GDP growth in the third quarter. For what it's worth, this seems extremely high. What a letdown the Fed speech was today, but also what an unsurprising speech from Fed Chair Powell. He did the market a solid and threw a mention of R* in the inflation target, but not in a way that offered any new insight beyond anything shared at the last press conference. Markets had some positioning to work through in the wake of the speech, but the process was done by lunch, and both MBS and Treasuries pretty much unchanged by the 1 p.m. hour. We closed the day up 9 basis points. Stocks were pretty much flat. At the close of the week, we are at 97.95, which is an ugly place to be. It also puts us in the middle of this wide range with a ceiling at 98.716, a floor of crappy. This wide range leads to a lot of bounciness, which you've been seeing for this trend pretty much all week. So looking at next week, if you thought this week was volatile, the calendar is saying hold my beer. Not much on Monday. Tuesday, we get the JOLT report, which is jobs. Then Wednesday, jobs. ADP jobs comes in, which has been all over the place. We also get the GDP advance of Q2 and the GDP sales final of Q2. And then on Thursday, jobs, list claims, and core PCE. Big one there. Big one there. And then Friday, we get jobs, non-farm payrolls, and unemployment rate, as well as participation rate, and then a global manufacturing PMI to round out the week. So buckle up, Buttercup. It's going to be a wild week next week. So what I would recommend is you take some time over this weekend, check out our sponsor at wellthatmakesense.com, and learn some new skills so you can increase your income for something other than controlled by nerds like the Fed.